what's happening in the Boston real estate market here in spring of 2025, how tariffs are affecting the market, what the hell is going on with interest rates, and so much more on a quick update here from Reference Real Estate. So what's going on with tariffs? Let's start there. So a lot of folks have DM'd me, asked me in person, what's happening with the market? What's going to happen with the market? Obviously, we don't really know, but there's a hot take that I want to just drop on you guys. This is how it all works. So obviously, tariffs are going to affect the stock market a lot. And you've seen that happen. We've seen 7, 8, 9% swings in the stock market sometimes in one day, which is super volatile, obviously, right? And so when the stock market becomes really volatile, what happens with the money is it usually comes out of the market into a more stable asset like bonds, the 10-year treasury yield, and other long-term assets. Mortgage rates are often affected by this, right? So the money flows out of more of a short-term or longer-term play, being the stock market, and into an indefinite long-term play for safety reasons, being long-term bonds, 30-year bonds, 10-year bonds, etc. And so when the money floods into bonds, the yield on bonds can get lower, meaning there's more buyers for this type of product. Therefore, the yield, the price that they give you on the interest just simply does not need to be as high as it was previously. And so as money floods into bonds, rates go down, the 10-year treasury yield goes down, and naturally the longer term mortgage rates kind of go down. So we've seen rates over the last few weeks get to 5, 6, 7 month lows and then shoot up to some of the worst days in mortgage rate short-term history. It feels like we've said that a ton lately, but as the tariffs got paused, you saw the money come back out of bonds, flood back into the stock market, and therefore negatively affect those bond prices, shooting the 10-year up and shooting mortgage rates back up as well. There's a bunch of other global economic stuff happening that's quite frankly way over my head. But as other countries sell off our treasury, naturally the yield has to go up as well. And we've seen a lot of countries sell off large positions of the treasury yield. So anyway, all that means is we're in for continued volatility. We've been talking about the volatility in the market for years now, since COVID. The reality is buyers don't care. Buyers definitely are looking for something a little bit more stable, though. They're not looking to do big renovations right now, and therefore are pausing on some of the homes that need a little bit more work. So if they're not priced to sell, then they're usually sitting, and homes are definitely sitting on the market a little bit longer. So that's just a quick hit on tariffs. What's going on with rates? Today we sit in the high 6s in interest rates for mortgages. There are a little bit better deals out there on some adjustable rate mortgages, and we've seen kind of a resurgence of the multi-year buy down where consumers can get a little bit of a better deal in the short term funded by the seller, especially on those fixer-upper type properties. Next, just a quick hit on inventory. So if you recall from the fall, we had a ton of inventory on the market, over 10,000 housing units here in the local market between condos, multifamily, and single families. That hit about 5,600 units somewhere in January, and we've been tracking it. I'll drop the chart in the YouTube section below, but we're sitting now close to 9,000 units on the market. We did see a huge dip in inventory, which has just been straight hockey sticking up right now, specifically over the Easter week. A lot of homes did not hit the market that week. It was actually a pretty good week to list because not a lot of competition hit the market. So we did list a few properties that week. But the inventory has been ebbing and flowing up 500, 600, 700 units a week here in the heart of the spring market. So we do expect that to start to tick back down as we get closer to the summer. And usually if you think about June as a calendar month up here in Boston where people go to the lakes or the Cape or travel, it's very difficult to get your home on the market in the later part of June. You just don't have a lot of weekends before everyone is gone for the holidays. So it's all coming up relatively fast. That being said, the single family market under $800,000 is still very, very tight. We're still seeing tons of offers on the turnkey properties that are move-in ready regardless of size. When I say tons, I mean 2, 3, 4, not 5 to 10 like we used to see, at least in the tighter markets of Boston. Out in the suburbs, though, these are still very, very competitive markets where we're seeing things go before the weekend even, and a ton of bidding wars, 100% going up 50, 60, 70, $100,000+ over asking on a starter home, 5, 6, 700,000. And even the top end of the market is still very, very competitive. We have clients right now looking in the city for a turnkey property, and we know that it's going to be very competitive. I've said this a ton over the years, but it's very important you analyze what the list price is on this property. Is this a fair market price? Is this a low price? Or is this a high price? And that really should help determine your offer strategy. If the home is significantly underpriced, we have to run those comparables and make sure that the buyer understands where that's going to end. So just a couple quick updates here on the inventory position in the greater Boston area, as well as how tariffs and all this other stuff going on in the economy is affecting the housing market. I don't see any end to the mid to high 6 mortgage rates anytime soon. We're going to have to see some very steady hands from the government, I suppose. There's so much stuff going on with Powell and Trump, and ultimately it will continue to cause some volatility. But the buyers are definitely settled in to these rates and understand that this is just what it takes to get a home right now. So if you're still talking about interest rates being super high, get over it. It's not a thing anymore. Last thing I'll tell you, and I think it's going to really help the inventory this year and in the next several months, is we've had a ton of conversations with sellers who were our buyers years ago, who held onto their condo or their townhome or their starter single family home when they upsized into their more permanent residence for the next 10, 20 years as they start their families. The amount of folks that have reached out to us and said something along the lines of, hey, what do you think I can get from my condo, my townhouse, my small single family? I know I told you I would never sell my house because my interest rate was 2, 3, 3.5%. The reality is people want their cash back. They want their down payment back. Their families are growing. And I think everyone's been really affected by either the market, unemployment, or ultimately just inflation in general and the higher interest rate market for years. A lot of people are in a little bit of debt, and this is no longer the best way for them to hold on and invest their money. So they want their down payment back. They have the ability to capitalize on a ton of equity that they've built over the years. And the reality is now those properties are going to come to the market. So the lock-in effect of these lower interest rates, keeping these homes off the market, I do think is starting to break a little bit for some consumers, more specifically the starter home, condo, townhouses, and the like. So we do have some good inventory here in Boston coming to the market. So I'm Seth Williams. I just want to give you the quick updates here on what's happening at Reference Real Estate and in the market. If you have any questions, drop a comment below or shoot us a DM.